FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
It's time for Manipulation Monday with Andrew Hoffman. Andy, how are you?
I'm doing great.
So, a lot to cover today because it is the first day after a holiday weekend. And, you know, they're really going at it today, aren't they?
Yeah, well, we were talking beforehand. I mean, I've been writing about, the specific manipulations that have been going on for a decade now. One of my favorites is, the Sunday night sentiment attacks, where they either immediately attack or cap the gains in the first few minutes. And they've now done it 52 out of the last 53 weeks, which is incredible, especially considering gold is literally the number one performing asset on the planet this year. And somehow it always goes down Sunday night. And of course, 2:15 a.m. Eastern, which is the open of the London thinly traded paper pre-market session, we're in the past year, we're at 90% of the trading days for the entire year. And the best part, we were talking beforehand, is I'm floored because when you have days where the market is closed, like on Friday, it's July 4th, to see gold and silver in those ultra thin, they always have these paper platforms that are open for, for in case something emergency goes on. You look in those markets and you saw that gold was hit at 2:15 a.m. Eastern, 8:20, which would have been the open of the COMEX if the COMEX was open, the 10 o'clock close of the physical markets, the 12 o'clock capital of last resort. I mean, they are so set in their algorithms to make sure that they're so terrified that gold's going to take off that they actually had them going on the July 4th holiday.
Yeah, it does make you wonder. So,
and don't forget, remember, gold hit its all-time high September of 2011, and what I call Operation PM Annihilation 1. It literally started the night Monday of Labor Day weekend. So Labor Day was just finishing. In the middle of the night was when they attacked. And not only that, they attacked within an hour of the most wildly gold bullish event imaginable, which was when the Swiss National Bank, the so-called conservative bastion of safety of money, devalued the Swiss franc by 7% and tied it to the dying euro. I mean, that's how desperate these guys are, that they are now attacking on holidays. And again, it's not working. Gold and silver come back every day right now. Look at the interest rates after the so-called amazing jobs numbers, which we'll talk about in a second, which were beyond horrible in reality. And here we are pushing back at that 2.6% level as the Fed fears what we call the most damning proof yet of QE failure, which is people buying treasury bonds en masse, assuming QE to infinity.
Yeah, and the more things change, the more they stay the same, right? And what about that job report there, Andy? Looked so great. We're down to 6.1% unemployment. It's a perfect world, right?
I mean, the thing is with these jobs reports, again, I talk about the 3 legs of the tripod, the deception tripod of the evil troika, I call it, the mainstream media, Washington and Wall Street. And all they have left, literally all they have left in this collapsing global economy is market manipulation, propaganda, and money printing. And the propaganda stool is breaking around the world. That's why you have QE to infinity pretty much everywhere. You have pretty much the worst economic activity of our lifetimes. And I'm talking about not just my lifetime, lifetimes of people who are a lot older than me right now. And when it comes to these jobs reports in the States, my article the other day, I think Thursday, was called Island of Lies. And it's basically saying on this island of lies, is the only place in the world where you actually see, quote, positive data. And that positive data is limited to 2 things. It's U.S. jobs data, which for years has been, according to the politicians and the bankers, the most important piece of data imaginable. And of course, these new diffusion indices, which are exploding throughout the world. There used to be 1 or 2 of them here in the States. And now it's like every week you got 4 or 5 of them. You got Market, this company that just went public. Talk about a conflict of interest. They're a public company. It reminds me of RoboCop, where the Omnicorp, whatever, they were in charge of the police. These guys are in charge of the economic data. And a couple of weeks ago, just when they went public, remember they put out the number and then said, oh, no, it's wrong. It's too high. It's too low. We changed our seasonal factor. So again, These diffusion indices are so ridiculous. They are the only thing in the world that are going up. Last week, you had construction spending down 0.5%, factory orders flat. I've been keeping track of this for the last 2 or 3 months. Today, the Gallup spending poll for June plummeted. Only place that's going up are these dumb jobs numbers, which we'll get to in a second, and the diffusion indices. And just I want to read a quote, okay? This is a quote from, of all people, Bank of America. You know, that no one is more in tune, more of a cheerleader, because they've received more bailouts than any company on the planet. They were talking about in China how the PMIs, which aren't that good to start with, are misleading. It is important to understand how crude these surveys are. Each month, a few hundred purchasing managers, this is in a whole country, are asked if a variety of activity variables are up, down, or the same relative to the prior month. Note that there is some guesswork involved, as the survey is taken before the month is over, and some of the questions cover variables that are difficult for a purchasing manager to get a timely read on. For example, a purchasing manager may not have a precise idea of what is happening to hiring in a large, diverse firm. Moreover, since they don't gather specific numbers for each series, they may have to make a rough guess, particularly if the trend is slightly up or down. So again, this is what we're supposed to believe is the positive. And then you have these jobs numbers. Again, it's not like the 280,000 jobs from Thursday is a new thing. This is months and months of putting these ridiculous numbers out with the death numbers. In this particular month, it was 120,000. The total number, only 25,000 are actually jobs, were actually goods producing. And then, of course, you have what I'm referring to here, the fact that this particular month, they're claiming that 523,000 full-time jobs were lost last month, as opposed to 800,000 part-time jobs that were created. And this is what I wrote last year in a piece called The New Employment Paradigm. All of the jobs are going away, the full-time jobs, because the companies, for one, they don't want to pay for Obamacare. For two, they have robots. They found more ways of being productive without giving the people the full-time benefits. I mean, if this is actually true, and remember, those 120,000 birth-death jobs, I'm sure, were all full-time jobs as well. So that number is even lower. And my guess is that what's going on in this economy is, you put this together, you're talking about exploding entitlement spending, exploding deficit spending, exploding government borrowing. And the only people in the world that are going to buy the treasury bonds are going to be the mysterious Belgians, i.e. the Federal Reserve.
It's just remarkable. You just look at those numbers and, they just scream out at you. And why does anybody even pay any attention to them anymore? It's just the dog chasing its tail.
Yeah. And again, remember, how much more effort can I put into proving that the weather had nothing to do with the GDP report? Okay. Last winter, first quarter GDP, forget that it's all fraudulent in the first place. And they actually used a higher inflation deflator last year. It was plus 3%. Now it's minus 3%. And we're told it's all because of the weather. And I proved in a piece called Mother Nature's Had Enough that it really wasn't that bad of a winter. So we knew that it was a terrible holiday spending season before the winter really even started. And by the way, did you know that talk about the government fraud? They reported minus 2.9% GDP for the first quarter, right?
Mm-hmm.
Okay. You know what the actual number was? 2.96%. So now the government is they can't even round.
They're rounded down.
They're rounding down. Okay. But the fact is, across the board, we've heard, first Wall Street was assuming 3% GDP growth in the first quarter. It turned out to be minus 3%. Now for the second quarter, all along, plus 3%, plus 3%. What I've been putting in my articles for the last few weeks is what the actual data is. Forget these dumb diffusion indices, which don't say anything at all, and they're seasonally adjusted. I'm talking about construction spending, retail sales, factory orders, industrial production, you name it across the board. Mortgage applications, everything has been flat as a board from April, May, and now into June. And yet we're still told there's going to be 3% GDP growth. I just don't get where people come up with this stuff. And when they do put out 3% GDP growth, if that actually comes out, and not that it would be a good number, it would really be meaningless, why anyone would believe it?
Got me. I mean, it just, you can't believe anything anymore. Look, if Moses came down from the mountain with those numbers carved into stone, at this point, would anybody believe it?
That's my whole point. The propaganda leg is breaking. And as for the market manipulation leg, I mean, it is truly remarkable to see valuations of stocks, let alone forget bonds. I mean, to see treasury bonds trading at all-time lows around the world with record inflation around the world and record sovereign debt is beyond reason. And of course, it's due to QE and the few market participants that are left betting on QE to infinity. But when you look at the fact that we have these mania-type valuations in equities right now, without a mania, and then you learn last week that the stock market, the governments of the world have bought half of all the stocks, go with half of all the bonds, and you realize what kind of hyperinflation is being created right here. I mean, there's no going back. When you own everything, you have to keep buying. You can't ever sell anything. And so, I mean, and they've even driven the VIX down to an all-time low. I mean, we're talking about a recipe for an absolute catastrophe. And every single day that passes, I am more fearful of what's going on. I can't even compare my fear now to where it was 2 or 3 years ago because I'm so shocked. And when you see the wars breaking out everywhere and the social unrest everywhere and all the blatant talking about we want the end to the dollar and it's coming, and yet people just sit there on their hands and wait for it to happen.
And when we return, let's talk more about the end of the dollar, because that is not the solution that's going to fix the world's problems. Not that it's going to hurt necessarily, on the Financial Survival Network.
FSN Radio.
When your accountant wants tax-free income, this is what he does. Accountants know the law. They also know that any American could legally get paid up to 3 times per month, 100% tax-free. That's 36 tax-free checks each year. It doesn't matter what you make already. This simple strategy could work for anyone. Go to www.irsrevenge2.com to learn how. That's irsrevenge2.com.
The Financial Survival Network. It's all about what's next.
We're back. It's Manipulation Mondays with Andrew Hoffman. So they end the dollar tomorrow and they have another fiat currency. It's not going to matter here, Andy. Let's face it. The damage is done.
That's
cycle.
Right.
We're in the cycle. I mean, we're in the worldwide depressionary cycle. Maybe the dollar caused it, but I just think these cycles happen. There's really nothing you can do to stop them, but you certainly can minimize them or mitigate them, which we haven't done a very good job of. But switching from the dollar at this point ain't going to help.
Well, the issue is not the dollar per se. The issue is fiat currency. The issue is the only global fiat currency regime of all time. Of course, there's cycles. And we have, because of fiat currency, our central bankers have played God with the help of politicians seeking short-term gain and corporate titans, the 1% seeking to coattail and get and benefit from it as well at the expense of the 99%. But all they've really done is by delaying the cycle, they've just made the whole thing that much worse. And it goes back, I'm sorry, to 1971. When not just the Fed abandoned, the U.S. abandoned the gold standard, but every country in the world allowed them to do that. They could have said, no, you reneged on Bretton Woods. We're going to redraw the system up. But instead they said, well, no, this is great. We all have empty credit cards because we've been using a gold standard for so long. This is great. Why don't we just charge up our credit cards for a couple of decades so we can look good and stay elected forever and hand out favors to our friends? But this is the end. We've reached the 40 years. It's done. We have reached debt saturation in the world. All debt creates now is more inflation. Nothing else. Zero GDP, negative GDP actually. And so when we talk about the dollar going, we're not talking about the dollar goes and then the Chinese yuan takes its place. No, we're talking about the system dies. And when you have a system that dies, the countries that have been living the furthest above the mean standard of living are the ones that fall the furthest. So the U.S. will clearly fall the furthest from its perch that it's been abusing for the last 4 or 5 decades, whereas everyone else will suffer, but not quite to the relative extent. When the new system is created, inevitably, because you have to have a system or else people all die in the world.
Yeah,
the
mass
countries
die
that
off.
have the gold, the countries that have the manufacturing market share, They are the ones that are going to be the new leaders of the world. And, for my money, it's going to be Russia. It's going to be China. It's going to be the countries that have intimate ties to them.
Yep. But that's down the road a bit. In the meantime, the spreading unrest around the world definitely cause for concern.
Yeah, I mean, how much more can we talk about that? What the Fed does when it prints money is it's exporting inflation, because as I wrote in The Final Currency War, it's a race to the bottom. If the Fed prints money, everyone else has to print money too. The problem is when everyone else prints money, their currencies are not reserve currencies, so they see inflation a lot quicker, especially the countries where the people use their higher percentages of their income on need versus want items like food. That's why the Arab Spring started in nations where you see people spending 60 or 70% of their income on food. But it's spreading around the world. It's everywhere. I mean, they're rioting in Brazil right near the World Cup right now. I mean, look, even in Kuwait, of all places right now, you're seeing the same kind of thing happen. It's Ukraine that's going on. Iraq is falling apart, large part because of what I'm talking about, and also because the West meddled into Middle East back after World War II and created these bastardized nations, which are collapsing. And they're collapsing, by the way, because of us, because we went in and bombed them and broke the ties that were binding them. So it's not going to stop. There's nothing that's going to stop it until the dollar dies as the reserve currency and the fiat currency system in general dies.
Yeah. And now we got European banks starting to fail, just like we said they were going to months ago, right?
Yeah. Again, I mean, who should be benefiting more? Who benefits more from low interest rates and QE, let alone when you have ZERP and NERP? That means that the banks are the only ones that get access to that free money, let alone the insider information that they all get, which is why JP Morgan and Goldman Sachs make profits on 100% of all trading days. They're the ones who should be doing the best of anyone, except they're not. Most of the profits they have are due to releasing loan loss reserves and other non-cash items, which is why they have to continue borrowing at zero interest rates just to pay their bonuses. But what I'm talking about here and what you're referring to is the bank stocks, despite we're basically at recordized stock markets in the Western world right now, but the banks are starting to fall behind, particularly those European banks, which should fall behind because the European economy is at its all-time worst, the worst loan creation since the beginning of the Eurozone. Some of the worst, aside from the UK, you're talking about new lows in the credit collapse, in the real estate collapses in places like Spain and Italy. Heck, Italy now has more debt than Germany. It's an amazing stat. So yes, last week we saw the fourth biggest Bulgarian bank collapse. Even more ominous, the largest Austrian bank. On Friday, their stock collapsed like 15-20% because they announced an unexpected 50% increase or 40% increase in loan loss reserves. We're looking at Paribas, which had to pay $10 billion to the U.S. government because the U.S. government didn't like that it wouldn't that it was doing business with Russia. You're talking about Deutsche Bank, which even the U.S. said was horribly undercapitalized, had to do a monster stock offering and a discount just to stay in business. Barclays hit a multi-year low stock with all their scandals. So one by one, the supposed strongest companies in the world are all falling apart. And when the banks go, all it means is going to be more money printing and the next 2008 style crisis right around the corner.
Yep, it's right around the corner. I agree with you there. It's just a question of when. But, when you see stuff happening in Europe, it's just a matter of time, right?
Well, heck, the ECB just lowered interest rates last month and went to negative interest rates because Europe is in such bad shape. And don't forget, they said, yep, we have $1 trillion QE package coming soon, and I guarantee you it's coming. The only reason they didn't do it this month was because their stock market was still propped up by the PPTs. But you watch, once the European markets start to fall, even the tiniest bit, let alone if their GDP continues at this hard pace and goes negative, they'll come rushing out with the QE. Which, frankly, I didn't even know they were allowed to do it. I thought the German Bundesbank can't do it. But they'll do it anyway.
There was that case in Germany said they could do it.
Yeah, that's right. They said, you know what? You make the decision. We're going to abstain from ruling.
Right.
So the point is, as we just talked about with Deutsche Bank, the German banks are just as in bed as everyone else. They're all stuck in this nightmare of bad loans and derivatives. And, Germany is the biggest lender to the French banks, and the French banks are the biggest lender to the Greek banks. So it's all a big daisy chain, and so the Germans can't let the game end. That's why the Germans don't call out the Fed and say, the Treasury, and say, give us back our gold, even though we asked you for it and you didn't have it, because they can't call that game out. Because once the whole world realizes that their gold isn't there either, then everyone will panic.
Massive loss of faith, and then the system breaks down, unravels, because it's all a big confidence game. And once the confidence is gone, it's over, right?
Yeah, and the confidence is going. I mean, what's left? The stock market? I think I saw someone sent me an article saying reasons why the U.S. is doing well, the raging stock market. I'm going, no, the stock market has nothing to do with whether the U.S. economy is doing well. And that's exactly what the powers that be are trying to do. Well, one, they're trying to enrich themselves because they're the only ones who own stocks right now. But two, again, to try to tell you that the stock market is doing well, so that means the economy is doing well, when right in front of you, the evidence is screaming otherwise, just shows you that, again, the propaganda leg is breaking. There's guaranteed no one in Europe that believes there's a recovery. There's certainly no one in Japan or China that believes there's a recovery. The only place, again, is on the island of lies where you have high jobs numbers from the BLS and strong diffusion indices.
Yeah, cause and effect. It used to be that the stock market was a leading indicator of the economy. And when the market went up, that meant that the economy, the real economy, was going to, take off. Well, now they're totally divorced.
Yeah, it didn't actually. They weren't always right, of course. Heck, the market was going up in 2007 and 1999. But at least it did reflect the expectations of the market of which way the economy was going. Now it reflects absolutely nothing because every single day, the Fed prints money and the PPT buys the stock market. And every single day, Fed prints money and the cartel naked shorts gold. But the point is, the physical market, unlike the paper markets, cannot be manipulated forever. You can't create gold and silver. And when I put a chart this morning of the Shanghai Futures Exchange, which is by far the largest of the physical deliveries exchanges in the world now. COMEX doesn't even deliver anything. The Shanghai Exchange has lost 80% of its silver inventory in the past year, starting with last April's big smash down. The inventory in Shanghai is just $125 million. There's 1,500 billionaires in the world. There's probably 15,000 institutions that have $1 billion, let alone $100 million. So, I mean, something is going to give soon. Is Jim Sinclair right? Is there going to be a major attack on dollar hegemony this fall, resulting in gold between $2,000 and $3,500 and silver at anywhere from $60 to $95? I don't know. If he's not, though, it's going to be pretty soon thereafter.
Yeah, well, he's made a lot of calls with a lot of time frames that have been wrong. But I'm not talking in the long run, he's right.
I'm not talking whether he's going to be right or not. I'm saying the fact is, it is very possible, given all that we're talking about, that this does occur this fall. It's hard, frankly, it's hard to believe that something tragic's not going to happen this fall. I mean, yeah, they can try to mess around with the stocks in July when everyone's on vacation on July 4th. But the fact is, again, look at all this bad news just over the July 4th weekend. It's only going to get worse. Are they going to be able to survive when we get through the fall? I would be hard-pressed to believe it, but I guess we'll wait and see.
And that's the end of the game. Let's wait and see. MilesFranklin.com. Go there, subscribe to Andy's work, and you'll find us on the FinancialSurvivalNetwork.com. Subscribe to our newsletter. Andy, we'll talk to you next week.
Look forward to it.
FSN Radio. It's all about what's next. Go to FinancialSurvivalNetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.